Welcome back to the channel, everyone. Today I want to dispel some FUD and talk about why a share recount won't work. Then I also want to talk about what will work and what will cause the AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, there's a tweet here from Tony Denaro. It says, if you're still here a year later asking for a new share count or a share recount, you aren't asking the right questions. Share counts are by process design going to report, surprise, the number of legally issued shares. Now, I think this is something really important to touch on and talk about. I've seen a lot of tweets recently and even some videos recently asking for Adam Aron to perform a share recount, saying that if we get 10% of the votes, then Adam Aron has to do what we want and perform that share recount, or we can vote him out. Now, I think this is a terrible idea to vote out Adam Aron just because he won't do a share recount, and at the end of the day, a share recount won't help us, so if anything, he's only really doing us a favour. So today I want to talk about why a share recount won't help us, because as Tony says, by process design, they're going to report the number of legally issued shares, and then also talk about what will help. Now, firstly, let's cast our minds back to May and June when the previous share count was performed. Adam Aron then reported on that share count with the following tweet. He said, many of you continue to be concerned about the AMC share count. In early June, we announced an all-inclusive share count total of 513 million legally issued shares. So exactly what Adam Aron has done here is count the legally issued shares, and he hasn't counted a single synthetic. Now, obviously, we knew that there was 513 million legally issued shares, and I don't think anyone in the world has been debating that. Everyone knows there's 513 million legal shares, but what we're confused on is how many illegal synthetic shares there are. And he says precisely 0 new legal shares have been issued by AMC since then, which again I don't think was up for debate. And he says, as to the existence of so-called fake or synthetic shares, or the naked short selling of AMC, we are unaware of any information validating these theories. And the reason why they're unaware is because AMC and Adam Aron don't know. They don't know how many synthetic shares there actually are. So why is it that Adam Aron doesn't even know how many synthetics are out there for AMC right now? Surely as a CEO, that should be part of his job to know how many shares, legal or synthetic, are out there trading, right? Right now, you can currently get a free share of AMC on top of the usual 5 free shares valued up to $3,500 each when you sign up with Moomoo using the link in the description below. Moomoo is also a brilliant commission-free broker that doesn't make its money from payment for order flow. Moomoo and Futu make their money from margin interest and payment fees, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also have excellent technical indicators and advanced charting tools, and even publish daily short selling volume on top of a number of other important pieces of data. All you have to do to get these 5 free shares valued up to $3,500 each and your free share of AMC is sign up to Moomoo using the link below and make your first deposit. When you sign up and make your first deposit, you get the 2 free shares. If you deposit $100, you also get a share of AMC. And if you can deposit $2,000, then you get all 5 free shares and the share of AMC as well. So let's go through the actual announcement from the July 29th, 2021 shareholder meeting, or I guess the announcement that was issued ahead of that shareholder meeting. So this is the exact announcement that was released by AMC and filed with the SEC word for word. So back in July 29th, there was 501 million legal AMC shares. Trading or other transactions relating to the shares, such as share borrowing, derivatives such as put and call options and divorce puts and married puts, and short selling do not impact the number of legal shares entitled to vote at the shareholder meeting. So straight off the bat, all of those synthetic shares and failed to delivers that are hidden inside the divorced puts aren't going to be included in this AMC share count, because the AMC share count only counts legal shares and it does not count any kind of derivatives or divorced puts. And it says the company, so AMC and Adam Aron, does not have record or have access to information regarding any share lending or any short selling transactions other than what is publicly available from third-party providers like Ortex or S3 partners, for example. So therefore, Adam Aron and AMC have no further information on the short selling of AMC other than what Ortex shows, which is obviously also basically nothing. AMC has received a high number of inquiries regarding so-called synthetic shares and fake shares. AMC has no reliable information about this. Therefore, AMC can't find any information or doesn't have access to that information on illegal synthetic shares. AMC and Adam Aron only maintain records regarding the shares it has legally issued and which are outstanding. Therefore, Adam Aron and AMC don't track illegal synthetics, they only track the legal shares. Asking Adam Aron to do a full share recount and to count all of the synthetic shares is like going to your local Walmart and asking the local shop assistant or the till boy to tell you exactly how many chocolate bars are in every single Walmart across the United States. Sure, that shop assistant may be able to go and count the chocolate bars that are in that specific Walmart store, but they're obviously not going to have any clue about how many chocolate bars are in every single Walmart in the entire US. So why is it that Adam Aron and AMC don't know how many synthetics there are? Well, it's all to do with market mechanics and how the market really works. This here is a brilliant thread by Kringle Kitten that explains exactly how it all works. He says, Part 1. In recent weeks, I've noticed a lot of conundrum about what the community should do on meme stocks. It boils down to a severe lack of knowledge on how market structure works. He says when we're referring to level 2 or level 2 data, we're referring to the public list of all pending orders on the exchanges, the Nasdaq, the New York Stock Exchange and others. He says level 1 information just shows you the best bid or ask at any one time, according to the NBBO, including the last price traded. This is on the lit market. So obviously level 1 data shows you the current price of AMC. Level 2 is that little list that shows all of the close bids and all of the close asks. And he says, consider the lit exchanges like we're going into Walmart. It looks like a marketplace where we could clearly see what's on the shelves. With brokers using payment for order flow as a business model, the bids are effectively rerouted towards a market maker which uses OTC venues to trade against them. This is level 3 where most people do not have access. Now, I think there's also a slight difference between having access to level 3 markets and also having access to the data in level 3 markets. So, hedge funds do have access to level 3 markets to perform over-the-counter trades, but even hedge funds don't have access to level 3 information. On level 3, market makers have the right to engage in naked short selling securities for the sake of providing liquidity. This is technically allowed by the law and is something we've known for months. When a market maker doesn't have the supply in their inventory to give to retail when bids are rerouted, they legally naked short a position to retail, giving them the stock at the price they want. But brokers have absolutely no idea the size of a market maker's inventory because that's level 3 information. They are solely interested into rerouting bids to generate cash flow through payment for order flow. So Kringle says, do we know there is existence of naked shorts in the market? Yes, this is technically allowed by the law for market makers for the sake of liquidity. Do we know that there's abuse of naked short selling? And he says it's very likely, but it is still legal. And he says, can we quantify the exact number of naked shorts issued by market makers? And he says, no, that's level 3 information. No one can do the math. And he says, therefore, a share recount doesn't work because it only applies to shares issued by the company, not those by market makers operating on level 3, which are essentially debt obligations. And that's why AMC and Adam Aron don't know how many synthetic shares there are. The only person that knows how many synthetic shares are in the level 3 is the market maker that issued those synthetic shares. And on top of that, because even the market makers don't have access to the trades in the level 3 market, even one market maker doesn't know how many synthetic shares another market maker has created. And therefore, even though Citadel know how many synthetic shares they have, even Citadel don't know how many synthetic shares Virtue have, for example. And obviously Adam Aron and AMC don't have a clue on how many synthetics either of those market makers have. Now, I need to do a little bit more research in terms of what the reporting of these over-the-counter transactions are, as to whether these transactions are actually reported to FINRA and the SEC and the DTCC. Because potentially, even though Adam Aron doesn't know how many synthetics there are, maybe the SEC does keep a record of all of these over-the-counter transactions and all of these level 3 transactions, and maybe they know how many synthetics there are. So what will cause the AMC squeeze? Well, this poster on Reddit posted this photo and asked the question: when apes learn more about in the money and way in the money call options and gamma squeezes, what will happen? Will it be a repeat of the January 2021 meme stock run? You can see at the moment, Citadel are very much stuck between a rock and a hard place. Do they short AMC below $20, but risk massive dip buying by us apes? Citadel are trying to do absolutely everything they can to convince apes to sell their AMC shares and convince apes to sell their call options. And obviously they're also trying to push those call options out of the money because they know that they will cause the squeeze. But they're playing a risky game because to get those options out of the money, they have to push AMC down lower, which could cause massive dip buying. As I've spoken about in my recent videos, we know that massive amounts of call option buying and call option exercising, providing they're in the money, is what will cause the AMC squeeze. Obviously buying the $145 way out of the money options that expire this Friday isn't going to cause a squeeze because it's not going to cause the hedgies to have to hedge for these options, or the market makers to hedge for the options. But obviously buying options that are in the money or way in the money will cause these hedgies and market makers to have to hedge for the options that they've sold us. And if they don't hedge for them, when we exercise them, they have to buy us the shares and they suffer massive losses. And I also want to quickly touch on some research done by AMC Bigums, which are unregulated hedge funds or family offices that manage around $7 trillion in assets. On May 6, 2021, in testimony before the House Financial Services Committee, the SEC Chair, Gary Gensler, noted the Archegos situation. He said the SEC has identified amendments to the Family Office Rule as one of its regulatory priorities for 2021, but so far in 2021 and in 2022, no such amendments have been made. So if you didn't already know, there's around 10,000 family offices worldwide, and around 4,000 of those are based in the US. And they have tons and tons of exemptions, and they also don't even need to file 13Fs and 13Ds. These family offices are effectively exempt from the rules and regulations, and this definitely needs to change. These family offices can have as much leverage as they like. They don't have to have tons and tons of cash in cash collateral, and they don't have to submit these 13Fs. They don't have to report how many shares they're shorting, and they don't have to report how many shares they own through leveraged derivatives, for example. This way, family offices can take on massive amounts of risk and don't have to report it. They also don't have to report what they're doing, so they can be performing many illegal activities and they don't have to report it and nobody's ever going to know. While naked shorting is illegal, family offices can technically naked short shares because they never have to report and they will never get found out. Clearly, family offices was something that was alerted back in May of 2021 and in March when Archegos went under, but it's something that's seemingly been brushed under the rug and been forgotten about. I also do think that family offices are something that needs massive regulation, and it's something I also want to look into further and do some more research and due diligence for you guys. Guys, be sure to let me know down in the comments below what you think about a share recount. Do you think it's something Adam Aron should do, or do you think it's pointless and won't really help with the synthetic shares? And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!